Hey, everybody. Welcome. Greg Fisk here, principal broker over at JPAR Maryland Living. Just wanted to check in with our market update for February 2023. This will really be kind of a recap of year in review 2022 and kind of where we were, where are we now, and kind of where we're going. So we don't have all the housing data in yet from January. So we're going to be looking at year over year numbers, December, all the latest information that's coming to us with regards to the market and the update. So, kind of start out a couple of things. Inventory continues to be the driving force in our markets. Again, supply and demand. We've been beating that drum for a long time now, but we've had price stabilization and prices continue to remain strong and increasing in our markets despite what they're what the national news may say. All real estate markets are local, and there are certainly some areas, especially on the West Coast and some other major metropolitan areas, where we've seen some drop in price point. We haven't seen that really in the mid Maryland suburb market here in Anne Arundel County, Baltimore County, but we're continuing to track all that information. Again, the buyer pool kind of pulled back and restricted. We had rates took a really sharp turn, jumped up, doubled in a very short period of time. Historically, the quickest that's ever happened last year. So we shot up from the threes and up into the sevens. Currently, we're standing at about 6.36. Last week, we're down 7 basis points from last week where we were. Continuing to track this and all the information out there from various economists, I do believe we're going to probably get back into the fives, mid fives, maybe even by year's end. So we're going to continue to track that. I know Fed Chairman Jay Powell just came out yesterday and raised the Fed rate to 25 basis points. Again, I think some of that's baked into where we're at on these mortgage rates. So I don't think we're going to see any seismic shifts in rates. But it continues to remain hawkish on fiscal policy. So a lot of cross currents out there economically. We're seeing different things with job reports and job numbers, CPI, your GDP numbers, and of course PCE, so that the Fed's tracking. So looking at a lot of those numbers, it seems that we're sort of in this stasis or this area where it's just kind of we're in flux. We're waiting for tomorrow's news cycle to run so that we can make a little bit more informed decisions, so to speak, I guess. But we'll look at the numbers hard and fast, what we have and what we're actually seeing, so we can make some informed analysis. Like I said, inventory continues to be that driving factor. We can look here and see from Maryland suburbs, and I'm kind of going to just lump a lot of our different target market areas into Maryland suburbs. Central Maryland is where we're doing most of our business, but this doesn't preclude Western Maryland or the resorts on the Eastern Shore. So it'll give us a good snapshot of where we're at. Months of supply, you can see where we were tracking up. And again, with this, as we do sometimes in the cyclical nature of the seasonality that we see in supply and the buyer pool, we're down a little bit on supply. We were trending up, but we'll see that I think in the last couple of weeks, we've seen some coming soons. So we will see a pop again for the spring market. You can see over 3 years where we're at with that supply and demand. Down a half, January 2021, February 2021, when we started seeing it rise from there. And coming again, I think we're seeing a little seasonality pop up in that supply demand, but we just are seeing that problem with inventory levels. It's just continuing to drive our markets, low inventory levels. And we'll see if we have legislation that can help us with some zoning variations, ADU, ancillary dwelling unit. Legislation is moving forward on the state level and most of the local municipalities as well. So hopefully that'll help out some of our supply side issues with inventory. Take a quick peek here, days on market. Again, we're looking at the Maryland suburbs in general. So you can see how we've been trending up. April, May of last year, we were down to 6 days on market, and that's a median days on market across all Maryland suburbs. So we know some homes were going, as soon as they were listed, if that's the median days on market, because there's some properties that sit out there and stagnate a little bit. And then we started slowly tracking upwards. Now, December 2021, from Maryland suburbs, we're at 19 days. Um, Hopefully, if we consider, that's a little bit more of a normalization on the number, like we are seeing since we did take that right turn and rate hikes, the buyer pool constricted a little bit, even with the low inventory and still being a solid seller's market. We saw seller subsidy return to the marketplace, home inspection, repair requests being fulfilled by sellers, and negotiations opening up across the board contractually. So that was a good thing to see. Healthy return to those negotiations and a more normalized market with regards to some balance there between buyers and sellers. So good deal. Pricing ratios, this will probably continue to reflect a pretty strong seller's market. Did dip below the 100% line there in the Maryland suburb market for December 2021, 99.3, but obviously very strong numbers for seller market. If it's priced right, shows well, there'll be no problem getting full market price, and having a contract within a reasonable period of time, obviously. Price per square foot, we like to always kind of just track this number and see where we're at. $241 median price per square foot for homes sold in that Maryland suburb category. We're looking at, well, let's take a quick peek at pricing trends, and that'll be the last metric we talk about. June 2021, we have seen a dip in some pricing across the board. I'm sorry, June of 2022, my apologies. We have seen a little bit of that correction there. And then again, if you go into smaller market areas, all real estate is local. So that's really where you're going to have to drill down and track on some of that. So we have seen a price dip with regards to some of our smaller market caps. In Arnold, Maryland, 415 December 2021. That's down 11.3% year over year. So despite being, strong economy and strong job market, obviously around here, and that mid-Maryland, central Maryland suburb market, we have seen a little dip in the pricing. Although Bright forecasts that mid-Atlantic region 2020 prices were up in 2020, 23.4% higher than 3 years prior. So prior to COVID, we had a huge jump in pricing, 23.4%. I think because of the inventory levels, we're going to see we're not going to have a return to 2008 numbers like we did the Great Recession. There was much greater inventory there. Obviously, we had equity losses in housing. We have lots of equity in the homes over this COVID period for the last few years, a lot more stricter lender guidelines. So a lot of those things are going to keep pricing stabilized. You may see like a little variation, downward trend a little bit, but I don't think we're going to see any sort of major tailing off on the prices like we did 14, 15 years ago. So that's kind of those numbers in a nutshell. Again, inventory is driving the story. We're not seeing enough inventory with regards to our buyer pool. We're at, again, taking a look at the Maryland suburb market. Probably going to be around 1 month. Yep, right at 1 month. 1 month as the months of supply for the Maryland markets there changed from December of 2021 up, but with regards to probably where we were at historically, You can see the 5-year average on inventory is 1.1. There's Maryland suburbs. The last 3 years certainly skewing that. We're currently at 1 month supply. And that whole number and that whole metric is going to be the new normal, is going to be readjusted as we continue to move out of that um, COVID period market on steroids, irrational market that we experienced. That new normalization of months of supply, if we can get it to 3 months, I think that'll be kind of one of our new normal vectors or metrics to track. So continue to see some balance between buyers and sellers. But anyway, there you have it. If you have any questions, give us a call at the office, 410-260-0202, or I'll drop in the Bright Year in Review 2020, the PDF and the information from Bright MLS. And as well, you can reach out to us via email, office@jparmd.com. So till then, thank you guys very much. Talk to you soon. Take care.